All right. Good morning, everyone. Thanks so much for joining us today, and welcome to our first Bank on Washington event of 2024, linking communities to safe, affordable financial services. What is Bank On? I am thrilled to be joined today by Erwin Reeves of the FDIC and Lisa Locke with the Federal Reserve Bank of St. Louis, who will be sharing more in a few minutes. Again, welcome. My name is Jennifer Quiroz. I'm the Executive Director of the Financial Empowerment Network, or FEN, and I use she, her pronouns. FEN is a nonprofit dedicated to the financial well-being of all Washingtonians, and we're the lead organization for Bank on Washington. It is my pleasure to welcome you all here today to this event. Before we jump into the presentation today, just a few logistics items. Please make sure that you are muted. And if you have not done so yet, please go ahead and introduce yourself in the chat. We would love for this to be a chance for folks in the room to connect with each other as well as connecting with us. Closed captions are enabled. You should be able to click on the menu arrow next to the closed captions button and turn it on for yourself. We will have Q&A time during the session today. There are a couple of ways that you will be able to ask questions. Feel free to drop questions in the chat throughout the session. We will be monitoring the chat and making sure to address those questions when we have pauses in the presentation. Or during the Q&A, you're also welcome to raise your hand and come off of mute and ask your questions out loud. And so we'll let you know when to do that. Also, the slides from today's presentation are available on the Financial Empowerment Network website, along with some of the materials and links to different things that we'll be talking about today. And so I'll drop that link in the chat in just a minute, or Maya may drop that link in the chat in just a moment. And last thing, this session is being recorded and will be available in the next week or so for view on our YouTube channel. So if you love it and want to watch it again or want to share it with other colleagues, you will get an email when that's available and with the link to the recording. All right, so please continue introducing yourself in the chat, and we're going to get started. I want to turn to our topic today, which is what is Bank On and why are we talking about banking access? So first, what is Bank On? For those who are unfamiliar, Bank On is a national initiative that was developed to meet the needs of folks who are or underbanked to get them connected to safe, affordable, and functional accounts. I want to be really clear as I lay the groundwork for today's session. We know that financial institutions and systems have been developed to help people with money to preserve and grow their money. And we know that in the process, many people have been excluded. Barriers are in place for people to access financial services, making it harder for particular groups of people to manage their money, specifically people who are low income, marginalized, and those who tend to be furthest from opportunity. So we are talking today about Black, Indigenous, and other communities of color, immigrant and refugee communities, people in rural communities, people who are unemployed, people who are unhoused, people who've been involved in the justice system, and more. The barriers we're talking about today, though, are systemic in nature. So they are not meant to be a reflection on any individual's intentions, but rather institutional level barriers that have been created with consequences that disproportionately impact some communities' abilities to access banking services, while other communities may not even notice that those barriers exist. So why are we even talking about banking? We know that banking access matters. Lacking access to an account at a bank or credit union can be very expensive. On average, a person who is unbanked will spend $40,000 over their lifetime on financial services fees. Another example of the cost of being unbanked comes from some work done by the Brookings Institute. In 2020, with the first round of stimulus funds that were provided, $66 million went to check cashers in fees that people paid to access their stimulus funds, rather than to families and individuals who really needed that money and could have accessed those funds for free if they had had an appropriate account and could have received a direct deposit. So we know being banked is expensive, and it also makes it harder to achieve financial goals. In one study shown here, unbanked financial counseling clients were less likely to increase their savings or to establish a credit score, which are both basic financial goals. While clients who became banked during the same study were 8 times more likely to increase their savings. So access to safe, affordable banking services is rarely the goal in and of itself, but basic access to safe banking is the foundation for setting and achieving other financial goals for individuals, families, and communities. So to address this gap, the CFE Fund developed a certification that financial institutions can obtain for an account that meets a set of national standards. These standards were created with consumers in mind to ensure that the accounts are safe, affordable, and functional. They offer benefits to consumers who may have limited or challenging history with banking. They're meant to be safe, affordable, and functional, a low barrier option for consumers. These accounts include features such as low opening deposit, low or no monthly fees, low or no minimum balance requirement, and one of the best features is no overdraft charges. The specific requirements for obtaining a certification are available at joinbankon.org, and we'll drop that link in the chat in just a moment. There are now over 400 Bank-On certified accounts offered nationwide, including 17 accounts at financial institutions with branches here in Washington State, and 34 accounts that can be opened fully online. And we'll drop links to where to find those resources as well. So we're going to use a couple of words today, and actually I've already started using them. And the first is unbanked. So when we say unbanked, this describes people who do not have a checking or savings account with a financial institution. About 3% of households in Washington are unbanked. The second word is underbanked. This describes people who have an account, but aren't fully utilizing it. They are continuing to use high-cost, potentially predatory financial services. So that might include check cashers, money orders, payday lenders, pawn shops. This might also include fintech solutions such as Cash App. Over 17% of Washingtonians are underbanked. This means that 1 in 5 Washington households are paying high fees just to manage their own money. So I want to pause. I feel like I've already talked for quite a bit, and I want to turn to the expertise of the audience for a moment. Those of you who are here are probably no stranger to this issue of folks being unbanked. So I would love for you to drop in the chat some responses. Why are some people unbanked? Why do people not have an account? What barriers that exist that prevent people from opening or utilizing their savings or checking accounts? If you work in communities where folks are not banked, what have clients said to you about it? What does your community say about it? Or if you work at a financial institution, why are folks' accounts declined? Ooh, there's a lot in the chat already. Language barrier, ID, identification, fear of financial institutions, language barrier, lack of trust. They don't know how it works, distrust, negative banking history. They don't know how to get back on track. Absolutely. Trust is coming up a lot. Check systems, that's an excellent one. If folks have had issues with accounts in the past, they were treated poorly in a bank and are not comfortable going back. Absolutely, that is the reality for people. No fixed address. Yeah, having an address can be a big barrier. Fear, they don't understand. Past negative interactions with financial institutions based on a marginalized identity they have and fear of entering those environments. Yep. Folks are mentioning fees, high fees, debt. It's not normalized in some cultures. Absolutely. Banking looks very different in different countries. Owing money that was never paid. So maybe they were overdrafted and don't know what to do about that. Following what their parents and grandparents did. Absolutely. They don't have the documents. They need to get an account. History of struggling to maintain an account. Lots of overdraft fees. Absolutely. None of this is surprising to folks, I'm sure. And yet, as we've seen, still 1 in 5 Washingtonians are underbanked. So with that, we are going to learn more about why, and I'm going to turn it over to Erwin Reeves. Erwin is the Community Affairs Specialist with the FDIC San Francisco Regional Office. In this role, he assists stakeholders to create relationships that bolster the economic inclusion of low-income communities in Northern California, Oregon, and Washington State. Mr. Reeves facilitates roundtables, forums, and listening sessions, as well as providing technical assistance to help bankers, community-based organizations, municipalities, and community residents develop programs that comply with the true spirit of the Community Reinvestment Act. Mr. Reeves has over 30 years of experience working in community and economic development, focused on developing and implementing technical assistance programs for small business, nonprofits, and low-income residents. Thank you so much, Erwin, for being with us today, and I will turn it over to you.
Thank you very much, Jennifer. Hello, I'm Erwin. We can go ahead and go to the next slide. And so I have to do this little disclaimer. So these are my views as an individual speaking to you all, and not necessarily those of the agencies that represent. Presentation cannot be reproduced, distributed by a third party without prior authorization. And then any references to special organizations or specific organizations does not constitute an endorsement. Next slide, please. So in this brief period of time that I have, I'm going to try and cover a couple of different areas, really explaining what the FDIC kind of does in this particular role as it relates to community affairs, and then our economic inclusion strategy, which is really focused on getting low and moderate income communities, that's residents, small businesses, more engaged in traditional financial services. We'll cover briefly the economic inclusion opportunity areas, because this is something that we just revamped. And so we put a little bit of a twist to it. And so I want to give some explanation of that. And then go down some of the results from the national survey of unbanked and underbanked households, but really more so with the focus on Washington as a state, and then look at some of the distribution of the bank branches as they exist currently, and then opportunities for collaboration. Next slide. So the FDIC is really focused around helping to maintain the stability and public confidence in the nation's financial systems. Some of you know us as the insurer of deposits for individuals, but additionally, we work with the other agencies around policy to make sure that there's economic inclusion, to make sure that deceptive practices are managed, handle consumer complaints. And so there's an array of activities that take place where the agencies share responsibility. And so the insurance portion is one part of it. You're experiencing another part now, which is really education underneath CRA and some of the other regulations that take place. And then we also do partner with the other agencies to do some education for our financial institutions as well. A big component is really promoting economic inclusion. This is under community affairs and community development. And as Jennifer described kind of in my bio, it's really focused on getting organizations to collaborate with one another for the benefit of low and moderate income communities. Then it's also, as a part of that, is really getting people into affordable credit and deposit services and products. And then finally, disseminating information. We do have a financial curriculum that is available and free for no charge from pre-K to senior citizens, and also includes financial services for small businesses. So it's just a little bit about what we do and kind of how and why we're in this particular space. Next slide. So as I mentioned, we really are focused on partnerships and collaborations. And so you could see that, and it kind of reiterates, you're going to see a little bit of a theme here. And then partnerships and collaboration, awareness and education, and then research and innovation. Under awareness and education, those are the links that you can find at our website, www.fdic.gov. And then in the search mode, you can put in Money Smart or Consumer News or Get Bank, and those are additional resources really targeted towards consumers. The Money Smart education curriculum, as I said, it's pre-K through senior citizens. And so there's individual curriculum for each category, and those can be utilized free of charge. They can be adapted so that you fit your specific clientele base or the target service area that you have. And while we do training from a national level, and they're quarterly what we call Money Smart Alliance meetings, where they provide train the trainer workshops. If you have some specific needs or questions, you can feel free to reach out to me so I can provide some technical assistance. And then lastly, the research and innovation. Again, we're going to touch on some of those things specifically for the state of Washington and do a little bit of comparison to the national numbers. Next slide. So this is the economic inclusion opportunity areas, starting at the far left. And just to give you a little bit of a background, our prior economic inclusion ladder really focused on financial education as an entry level, access to deposit accounts as the kind of the next run, access to reasonable consumer credit, affordable mortgages, and then financial services for small business. The change in our kind of strategic plan and overview is really related to the interconnectivity that happens from those previous things that I just mentioned, and that everyone is at a different stage and at a different place. And so the first step in creating and sustaining foundational banking relationships is really to get people back into the financial services and not be subjected to some of the alternative services that are predatory, and really trying to make that adjustment so that people get a better understanding of how to use the system for their advantage, to help try and build up some additional trust and address some of the barriers that were mentioned very heavily in the chat. And so that next step from there is then building household financial stability. That looks different for different people. And what it is really trying to get, again, where households aren't utilizing predatory services and they're better able to manage their money for ongoing purposes, just day-to-day necessities, but also being able to prepare themselves to have some emergency funds for spending, just to take care of those little things that pop up. Dryer breaks, a tire busts, being able to handle those little emergencies without having to then go back into the predatory services. And then kind of the third step, and this is where the change is a little bit more demonstrative, where some people are able to purchase a home. You know, it's very expensive to any place right now, really, on the West Coast, particularly in the Pacific Northwest. Housing is expensive. And so people may not be able to necessarily buy a home, which has traditionally been how family wealth has been created, through the purchase of a home and then passing that on. It may come in the fact of that someone's able to start a business and to be able to generate and create some wealth from that standpoint. So instead of kind of looking at those as separate activities, it's really helping people achieve a secure financial future and really building wealth through investments that can be a house, but can be other savings mechanisms, other investment opportunities, and really being able to kind of start that second generation of wealth because there's been some household and financial stability. And then the last piece is really, when you look at it, it's about having kind of a complete package for folks where They have access to traditional financial services, whether it's lending, investments, or services. They're able to, from that standpoint, to build strong and healthy communities, and then making sure that we have true economic inclusion for low and moderate income neighborhoods and underserved communities, so that they can continue to build their, not just their wealth, but also kind of build that out for the next generation. And so it's a little bit of an adaptation from what we've done before, but the primary components are still the same. Next slide. And so we're going to kind of move into the national survey. This is the landing page for the national survey of unbanked and underbanked households. And you can see there's kind of the graphic with the map, and you can literally click on the map and it'll start to lead you down a path. As it relates to neighborhoods and counties. At this point, I think it's just the matter of the number of, I'm going to take my camera off for just a second because it says my connectivity is suspect. And so I'll come back on in a second so you can see my face again. But this report really gives an overview. And then when you look at the numbers that we're going to take a look at as practitioners and folks that are working actually on the ground, you'll be able to see that there is some relatability. Unfortunately, it won't be the specific numbers, but you can get access to reports, appendixes. You can do customized charts. You can look at a 5-year survey. When will the survey be updated? It's done every other year, so there will be another release that takes place in October of this year that will represent 2023, and that'll be, usually it's about the first or second week of October when that kicks in. Next slide. So the primary use and methods, and this is by year. We're starting off with Washington, but you can see that between 2017, 2019, and 2021, there's kind of been a steady decline of in-person activity, and even more of maybe to a lesser degree of ATM use. Telephonic banking is probably going to disappear in the next 2 or 3 years. And then even seeing the movement of online banking kind of going down as mobile banking is taking off. And this fits within the national scope. Regardless of the region, the FDIC has 6 different regions: Dallas, San Francisco, Chicago, Kansas City, and New York and Atlanta. And we see these trends happening in each of these markets. In the Pacific Northwest, it's a little bit more progressive. Same thing with California, and to a lesser degree in some of the states in the South. But there's a stronger movement, excuse me, going towards mobile banking. And we can expect this trend to continue based on the data that we kind of receive on an ongoing basis and communication with the bankers. Next slide. Reasons for not having a bank account. I think every one of these items has already been identified, and it is unfortunately the very first one is, I think, more of a function of systematic change that is taking place, and the benefit of having bank on accounts, because having a modest minimum balance requirement really gives low-income families an opportunity to participate in the financial services system and then optimize their money on a higher level. And then the number 3 levels, you're looking down this list, don't trust banks. I think that is something that is literally universal across the nation, but there's a higher degree of that where we have people that are coming into the financial services system. They could be from other countries, again, because of cultural experience, because of their own individual experience, and even folks that have been here for quite a while don't necessarily always trust financial institutions. So that's something that has to be balanced. That is one of the benefits of utilizing a program like Bank On, because it's an opportunity for there to be an introduction to a financial institution because they have a specific product that's available for people that are being either introduced or reintroduced to financial services and back into mainstream uh, banking. And so building off of those relationships, collaboration and partnerships allows that trust to improve, but it's always something that needs to be kind of monitored from time to time. And so I'm not going to read down each of these because you guys have identified quite a bit of these challenges or barriers because of your experience with the populations that you work with. Next slide. So here's the unbanked rates by year. Goes back to 09, and this is based off of the surveys that we've completed over time. So it's really, with the exception, I think, of 2019, it's really comparative data on a strong basis. There was a slight modification to the way the survey was completed in 2019, and so that's, you see, kind of there's a little bit of a blip in the number as far as the trends as it relates to Washington, and then it's kind of recalculated after that. This is actually really good. As you can see, the trend, with the exception of 2019, has continued to decline. The challenge is that folks are moving from unbanked and moving into underbanked. And as Jennifer pointed out, it means that they're still using some alternative financial services that are costing them a little more than they should be paying if they were in a more traditional environment. Next slide. And then this is the, kind of a little bit of a breakdown, but the use of non-bank money orders and check cashing institutions. While the trend for money orders is up, that's that's not too bad. But we really want folks to not utilize that service because they won't have to pay as much for that if they have a good bank on account, which will allow them to complete transactions at a lower cost for their household. And then non-bank check cashing is started to trend down. I hope it stays that way as the economy did some resurgence over the last year or so. People started kind of drifting back into habits that were occurring prior to the pandemic. And so it'll be very interesting to see whether or not these trends continue. Next slide, please. And then this is the use of prepaid and non-online banking payment services. And love my folks in research, but I think we have a little bit of a gap that we need to pick up because we know that there are non-bank online payment services that are being used fairly heavily. I'm speaking of things like Cash App and PayPal that take place. Zelle is typically tied to an account, so that's a little easier to monitor. And so we know that that's taking place. How are we able to capture that information is really a challenge because folks that are using that for the most part that are in low and moderate income neighborhoods and geographies aren't necessarily in the banking system. And so this is something where statistically we have to find a way to collect more of that data. And you can see that folks that are banked, they're kind of moving in that direction, lower use on the prepaid cards and doing other online services. But we just don't have that much information on the unbanked at this point. Next slide. And then the use of credit cards and personal bank loans. You could see that Washington is kind of well above the national averages. That's good, overall, as folks are getting access to that. But we still want to have households in a state where they're utilizing fewer credit cards and personal loans, and are able to kind of save some money and benefit from being able to have a lower cost for their financial services. Next slide. This is, I think, a favorable trend. I hope that we see this continue for the 2023 numbers, but you can see that there's been a good decline by the state of Washington in the use for the rent-to-own, payday, pawn shop. One of the most deadly, I think, drains on low-income households is the tax refund anticipation loans because of the high um, the high fee rate that takes place, and then also auto title loans. So these are good trends that are happening. Again, it would be nice to see that continue. I have a sneaky suspicion that it might tick up just a little bit as people are kind of coming out of a post-pandemic economic environment. Next slide. So this is a tough graphic to read, but I think it's important to take a look at. All the little gold dots represent the bank branches throughout the state of Washington. And where you see a lack of branches, a lot of that is very geographically challenged. So that means it's either a mountainous range or there's some separation, a natural barrier, lower population from that standpoint. The dark green areas represent low and moderate income communities. And so you can kind of see where there's clusters that are taking place. Um, some of those larger clusters, and it'll show in the next map that I'll show you in just a moment, um, also lay over some of the tribal communities as well. And so there's opportunity, both the fact that there might be low population density, but there's also more of a need take in those places because some of those smaller towns don't have as much access to resources, including financial services, because of that geographic separation and dispersion. But you can see where the clusters are taking place. When you look at the far east, that's kind of the Spokane area from that standpoint. You can see kind of all around Puget Sound where things are, and there is some separation that takes place. But the fact that there are bank branches that are in place, there still are some kind of banking deserts that exist. Jennifer, next slide. And so when you look at this map, again, it's a little bit of a challenge because things are clustered to a great degree. But what I wanted you to see that the dots almost mirror pretty closely to what is happening for all of the branches that are available in the state. And so there is pretty good coverage for bank on accounts because of the relationships that have been established with financial institutions. There's a need for that to grow and to continue so that we can make sure that all communities have access to bank on accounts so that we can get people doing a little, giving them the opportunity to do better as far as managing their funds because their expenses would be lower overall for their financial services. But there's room for improvement, but we do have good coverage, I think. And we just want to get more financial institutions engaged, and that means both credit unions and community banks because we think that there could be a broader impact. Jennifer, next slide. And so, opportunities to collaborate, really participating in events and activities like this. The FDIC, we do community development forums. In the state of Washington, I do 2 to 3 events each year on a variety of topics. And so as I utilize the Financial Empowerment Network to kind of spread the news and help me promote some of those activities, but collaborating with the Department of Financial Institutions, collaborating with the Financial Education Public-Private Partnership. I don't want to just start naming partners, but these are organizations that we work with in an effort to try and make sure that we're getting the word out when we're doing activities. There's also the opportunity to meet with local financial institutions and local community partners. These happen in various ways, but that includes the FDIC and myself participating in a variety of activities that are taking place, just so I can learn more about what's happening on the ground and what's happening in your individual markets. And then there's also the use of FDIC resources. Again, www.fdic.gov, and then you can kind of use that search feature from that standpoint to get a little bit more granular. I would like to encourage you to join the Money Smart Alliance. There's no cost, there's no fees. And what it does, it lets you see how organizations are utilizing Money Smart across the nation. And it also gives you a network of folks that are focused on financial education and financial literacy that you can use as a resource to kind of bounce ideas off of in order to develop kind of the best curriculum for your clientele. And then just cross promotion of FDIC economic inclusion and the financial capability resources. Next slide. So here's my contact information. I believe Jennifer said that the slide deck will be available for everyone. But if you have any questions, feel free to email is usually the easier way to contact me. And running around a little bit, but I try and get back to folks as quickly as I can. Are there any additional questions? I wasn't able to keep up with all of the chat, but I think I addressed a couple of questions I saw.
Thank you, Erwin. I'm going to keep us going, but if folks have questions, please drop them in the chat as we go. We will get to them. Thank you, Erwin, for all of that information. I want to pass it now to Lisa Locke. Lisa is a community development advisor based in the Louisville branch. I can never say, I want to say Louisville because I'm from Washington State, but the Louisville branch of the Federal Reserve Bank of St. Louis. She serves as the lead relationship manager for the Bank on National Data Hub, providing support to new and existing financial institutions that participate in data reporting. She fosters partnerships and initiatives that promote Bank On throughout the entire 8th Federal Reserve District, which includes Arkansas, Southern Illinois, Southern Indiana, Western Kentucky, Northern Mississippi, Eastern Missouri, and Western Tennessee. Her work includes conducting outreach, analyzing policy, convening events, providing technical assistance, and highlighting effective programs and tools. Ms. Locke has worked at the St. Louis Fed since 1994, serving in various positions in the payment department, sales and marketing, and human resources. And with that, Lisa, I will hand it over to you. Thank you.
Thank you, Jennifer. And I really appreciate the opportunity to present today and speak with everyone. This is a great opportunity. It's morning for some, it's afternoon for myself, but that's okay. I'm so glad everyone is up and out and about and ready to talk about what's really going on with financial inclusion and access to banking and really what's happening in Washington State, and look forward to sharing information more about the Bond Hub also. And I'll try to get through this quickly so we have enough time for Q&A at the end, because I know that is the most important part of the webinar. So Jennifer, next slide, please. And like Erwin, I am from a regulatory agency, and so I have to read the disclaimer. The views expressed are my own. They do not reflect the Federal Reserve Bank of St. Louis, the Federal Reserve Board of Governors, or the Federal Reserve System. Next slide, please.
Lisa, we are not able to see you. It's doing the same thing it was doing earlier. I don't know if you can fix that or if we just keep going, but just wanted to let you know.
Let me try to turn my camera off. And is that better?
Nope, we still can't see you.
Oh, I'm sorry. I can see myself. Hold on, that's not working. Still no better?
No, we can't see you.
Okay.
But that's okay. We'll keep going. We can see your slides.
Okay. Sorry about that. I'm so sorry.
Right, thank you.
So I'll keep going. So this is a map of our Federal Reserve districts, our Federal Reserve banks. We have 12 districts. And as you can tell, the districts were created in 1913. So everything is really to the east, and very, kind of clustered in that particular area. Even in Missouri, we have two head offices, one in St. Louis, where I work, and then one in Kansas City also. And then, of course, the West for the San Francisco district, it's a large area because the back in 1913, it wasn't as developed as it is today. But when people think about the Federal Reserve Bank, they usually think we are a central bank of the United States, and they usually think about monetary policy, interest rates, why are we raising interest rates, and supervision and regulation of banks. But what a lot of people do not realize is that we also have community development functions in each of the 12 reserve banks. And we work to promote economic resilience and mobility for low and moderate income and underserved individuals and community. And the Washington state is actually covered by the San Francisco district. There is actually a branch also in Seattle, and Jenny Glass. I'm not sure, Jennifer, if you're familiar with Jenny, but she's actually based in Oregon, but she covers Washington state. Next slide, please. Our community development function here in St. Louis, our vision is that every individual and community has the opportunity to benefit from the economy. So next slide, please, Jennifer. We have three different teams on our community development in our community development department in St. Louis. The team that I am a part of is our community partnerships and investments team, and we're really considered are the boots on the ground. We engage and convene community stakeholders. We broker information, and we also help build cross-sector networks and collaborations. Some of our work includes our quarterly newsletter, our Bridges newsletter. We host conversations on equity, and then the Bank on National Data Hub, or the Bond Hub, which I will refer to from here on out, is the function that I lead, and that is part of our CPI team also. Next slide, please. As Erwin and Jennifer have both pointed out, the Bank on Coalitions, it actually the first one launched in 2006 in San Francisco. Of course, they can be city or state led, bringing together financial institutions, community organizations, and local government, and really to help improve the financial futures of unbanked and underbanked families. As you can see from the map here, from 2006, when San Francisco actually launched the first Bank on Coalition, it is now a national movement. There's 100 Bank on Coalitions throughout the United States, 447 certified Bank on products, and those Bank on certified products are available in over 46,000 branches. Next slide, please, Jennifer. Just a little background, and I've covered some of this about just the national landscape of Bank On. Like I said, there's 100 coalitions. The CFE fund, as Jennifer pointed out, actually certified the Bank On accounts, and those national account standards includes, like she said, a minimum of $25 or less to open up the account, low or no cost monthly maintenance fees, no overdraft fees, access to the ATM, offer bill pay, and of course, online banking. Next slide, please. So after the launch of the Bank On Coalitions and the Bank On products, it's like, why do we need the Bank On National Data Hub or the Bond Hub? And this is the Bond Hub is actually a national data reporting initiative, and we launched this in conjunction with the CFE fund. And it was really to streamline the data collection process for all partners. Prior to the Bond Hub, say if U.S. Bank was active with coalitions, maybe in 6 or 7 different coalitions, each coalition was asking the financial institution to report to them, typically on a quarterly basis. So with the Bond Hub, this is a more consistent, the metrics are consistent, and the financial institutions only report to the Bond Hub and don't have to report to multiple coalitions. Also, the Bond Hub, we produce an annual report, typically November of each year, sometime in the fourth quarter, but typically the first part of November. We produce a report with all of our findings, all of the data that we collect and that's reported to us. It is available, publicly available. And then it also just helps to tell the story about the bank on movement, the impact that the bank on accounts are having for those low income individuals and communities. And we can track this all the way down to the zip code level. The Bond Hub was actually launched in 2017. It was a pilot year. And we had 4 institutions that actually reported to the hub that year: Bank of America, JP Morgan Chase, US Bank, and Wells Fargo. Last year, we had 35 institutions to report to the hub, and hopefully we have at least another 10 to 15 that's in the pipeline to report their 2023 bank on data to us this year. Next slide, please, Jennifer. So as I mentioned, the Bond Hub is important because it does streamline the process for all partners. So if we have institutions that are active with several bank-owned coalitions, they can just report the data once to the Bond Hub. That reporting to the hub is done annually, once a year. And then all of the metrics that we collect, they're consistent. And so if institutions are wanting to compare their bank on product to other institutions, they're really comparing apples to apples if they're looking at other bank on products, and can see what they're doing also and compare that, because it's a consistent metric versus prior to the hub. Everyone was just kind of collecting. There was maybe no clear definition of exactly what a bank on account was and exactly what each coalition was collecting in regards to the data that they was wanting the institutions to report. So it's very consistent also. Next slide, please, Jennifer. Some of the benefits of submitting the financial institution submitting their data to the Bond Hub, as I mentioned, is a national comparison. They can compare how their bank on account is performing in comparison to other financial institutions, even though they may not know exactly which institution it is, because everything is anonymous. We don't want anyone to be able to tell which institution reported what, but they can still have an idea and get those numbers as to how their product is performing compared to other bank on accounts. We also host an annual meeting at the end of each year for all the participating institutions, where they can discuss their findings, they can share best practices, and they can learn from other institutions. And then it's also a way to, like I said, just to demonstrate if the bank on products and these accounts are reaching those that are most in need. Next slide, please, Jennifer. The institutions report to the Bond Hub, like I mentioned, is on an annual basis, and it's on a 1-year delay. So right now, institutions that are reporting their information, their bank on data, is the 2023 data. So the latest data that we have are our 2022 findings from last year. Last year, we did have 35 institutions to report to the hub. And even though there's over 400 bank on products, certified bank on products out there, institutions that have products, we're only getting about 10% that report to the hub. But of those 10%, they cover about 87% of all US zip codes. And we only, in our aggregated data, we only report to the zip code level if we have at least 3 or more financial institutions that have reported to that particular zip code. So the more institutions that report to the hub, the larger and the better story we can tell, and hopefully we can cover the rest of these zip codes that we're not hitting right now. Also, from the 2022 data, over 3 million new accounts were opened last year. The majority of the account holders are using the features that are available to them. A third of the account holders use direct deposit, and the average monthly balance on these accounts is just over $1,100. Next slide, please, Jennifer. Some of the Bank on Washington data facts that I have. Jennifer, you mentioned earlier there were 17 financial partners. I have 16 in the in my presentation, so I must have missed one. But 16 financial partners that have certified bank on accounts for the Washington state. 7 out of those 16 or 17 financial partners are actually reporting to the hub. Just a few key numbers here. Washington State, for accounts that have ever been opened, there's been over 238,000, almost 240,000 accounts that have ever been opened. And Seattle has about 16% of those accounts at 37,715. Tacoma, accounts ever opened there, just at 15,718. Spokane just at about 9,600, and Vancouver at 11,891 accounts that have ever been opened there. And looking at some of the surrounding states to Washington, Oregon, they've had over 417, almost 418,000 accounts that have ever been opened. And then you have Idaho, which has like 41,583 accounts ever open. So, what are you all doing that has been successful, and what's working, and what can you do to continue to promote the coalition? And also, there's a couple of very interactive data tools where you can find all these numbers and play around with it and get information at the state level, the city level, down to the zip code level. We have a data tool on our website, and I believe Jennifer has that on the on her website. And then there's also the CFE fund. They have a very interactive data tool also that's available. Next slide, please, Jennifer. Some of the Bank on Washington partners that are reporting to the Bond Hub. There's Bank of America, Coastal Community Bank, First Fed, JP Morgan Chase, PNC Bank, US Bank, and Wells Fargo. And then also in the pipeline, the institutions that have reported prior to the Bond Hub, their data is due to us by the end of March 31st. And for new institutions that are wanting to report, their deadline to report is May 31st. So we have a couple that are in the pipeline that have completed. Banner Bank has completed all of the paperwork and gotten their credentials, and they should be ready to report their 2023 data sometime this month. And then KeyBank also has expressed an interest in reporting to the Bond Hub. They've expressed an interest for the last several years, and we're really trying to get them on board. And actually just got an email from them this morning, still trying to move forward and getting them all of their credentials so they can report their information and their bank on data to us this year. So hopefully, fingers crossed, KeyBank will also be one of the institutions to report. Next slide, please. And just to summarize on just how to leverage and continue to grow the Bond Hub, as I pointed out, the data submission deadlines for institutions that have reported before is March 31st. For new institutions, it's May 31st. The data submission is voluntary. And, we would certainly want to see that grow so we can just tell a better story about the bank on accounts and the importance and the impact that they're making. So the submission is voluntary, but it's only once a year. We need at least 6 months data to have at least 6 months worth of data before you start reporting to the hub. So, for example, we have an institution that launched their bank on account in September of 2023. They wanted to report this year, but they would have only had 4 months of data to report. So they'll start reporting to the hub in 2025. You can always contact me to start the process, and then I would encourage you to continue to work closely with your coalition to learn more about the hub, Bank On, what's going on, and then just to also get some of the data that's out there and available to share. Next slide, please, Jennifer. Just wanted to also share that we're hosting in our St. Louis office in November 14th, a banking access and financial inclusion event. We're still in the planning stages of it, but it's going to be a day-long event just talking about the state of financial inclusion, present some of the research that's going on banking access and financial inclusion. And then we also want to highlight some of the promising practices and some of the latest trends also. We're still we have a rough draft of the agenda and what that day will look like, but we are still planning. So if anyone's like, I know a dynamic speaker that should be, I would love to hear that can really speak on financial inclusion and access to banking. Please throw those names in the chat. We're still looking for suggestions and really would like any input that you can offer. We would certainly appreciate it. Next slide. This is just some of the resources that we have available in our community development function, and I won't touch on those. Those slides are out there and available. And then the next slide is just if you would like to connect with us, the various ways in which you can connect with us. And so with that, Jennifer, I will turn it back over to you and try to work on my camera also and see if I can get that back up and working.
All right. Thank you so much, Lisa. We only have a few minutes left, so I'm going to move through a few final things, but if folks have questions, please feel free to drop them in the chat or raise your hand, and Maya's going to help me monitor that while I keep going. Bank On is really a collaborative effort, especially Bank On Washington. In order to address banking access on a large scale, we really need partners from across sectors engaged in this work. So the magic of Bank On Washington is really that we're able to convene folks that normally aren't in the same spaces together to have these conversations on financial inclusion. I do want to be clear, we engage with financial institutions, any financial institution, whether you offer a Bank On certified account or not, you're welcome to engage in Bank On and you're invited to participate. And we also work with community-based organizations, local government, and federal regulators, because each of us really holds a piece of the puzzle. This is the worst PowerPoint slide ever, and it goes against all the rules of PowerPoint slides, but I just wanted to share with you our current Bank On Washington Steering Committee members. This steering committee launched in 2023 in December, and our co-chairs are Becky House with American Financial Solutions, Jarrell Jones with Credit Revolution, education directors, and Minda Michelle Maddox with the Washington State Employees Credit Union. This committee is really helping us to move the work of Bank On Washington forward. It is an open group. We have been meeting monthly, but we're going to be moving to a quarterly meeting schedule. If you're interested, please reach out to me and let me know. I'm happy to add you. And then Bank On Washington is sort of focused on two different things. The first is convenings. So I want to mention we have some upcoming things if you are interested in participating. The first is on June 25th, our Justice and Finance Forum, Fostering Economic Resilience. It will be another 1-hour session from 10 to 11 a.m. Focused on how to best serve folks that have been impacted by the justice system. Maya will drop the link to that in the chat. Already did. Thank you. And then the Bank On Washington Forum 2024 is Leading the Way, Embracing Financial Belonging. This is an in-person 2-day event. It will be happening towards the end of October, and a save the date should be coming out soon. In addition to being a convener, our other goal is really exploring how we get folks connected to these accounts that are out there. And so just want to mention that we are available to do outreach presentations, chat about Bank On accounts, and get you connected with Bank On certified partners if you are not currently connected with any. And we're also really exploring how we more intentionally integrate products and services into the work that community-based organizations are doing. And we're hoping to have more of an increased focus on that in the coming year. So please stay tuned for that. There are also a lot of local Bank On coalitions across Washington, in addition to asset building coalitions. So, FEN, we participate in Bank On Washington. We're also the lead for Bank On Seattle King County, but there are Bank On coalitions that are operating throughout the state. If you're interested in learning about what's happening locally in your community, I would suggest looking into the asset building coalitions. Some of them are doing Bank On work, others are not, but you can find them on our website there. There are 16 ABCs that cover 17 counties in Washington, plus the Northwest Native community. So you can find more about those there. And again, if you're interested in getting connected, please feel free to reach out. I just want to highlight again, who is Bank On Washington for? We're really for any financial institution that is wanting to reach folks who are un- and underbanked, low and moderate income communities, and those that have been excluded from mainstream financial services, community-based organizations who are working with individuals, families, and communities that are facing financial challenges, government partners who are wanting to find ways to increase financial well-being and streamline access to financial resources, and anybody that's interested in increasing financial inclusion and financial well-being for Washingtonians. There's lots of ways to get engaged. You've heard about many of them. As a financial institution, if you are not currently offering a Bank On certified account, that would be one option. If you are offering Bank On certified accounts, as Lisa shared, you can report to the Bond Hub. Participating with the FDIC on their financial inclusion work, connecting with a local asset building coalition or Bank On partner, attend an upcoming Bank On Washington event, or join a steering committee or forum planning team. The Financial Empowerment Network is also doing lots of other work, and I just want to mention, if you are not familiar with what FEN is doing, we have free workshops for providers that happen most months. We also facilitate a financial coaching network. We have a financial wellness provider directory and lots of financial resources and tools on our website. And there are lots of ways to connect with us, fenwa.org or Bank On Washington. We're also on Facebook and LinkedIn and YouTube, and there is my email address as well. Thank you so much, everyone who has joined us today. We've gone a couple of moments over. If you have further questions, please feel free to reach out. Thank you, Erwin and Lisa, for your time today in sharing with us the information and resources from the FDIC and the Federal Reserve Bank. And if you are still here, and before you leave, if you don't mind, we would really appreciate your feedback on this session. We have a survey that you can take. It's just a few questions. Your feedback informs our future events, so we take it very seriously and would appreciate any information and feedback that you have to share with us. I am able to stay on if folks have questions. I also realize we're over the hour, so if folks need to drop off, I understand that as well. So let me just open it up and see if folks have any questions for us.
Jennifer, there was one question, and I'm not sure if I'm saying the name right. Munzie Peg, I believe, had a question, and I wasn't exactly sure how to address it. Let me find it really quickly. Some of her clients owe SSI, SSDI, and unemployment overpayment. Will money, so I didn't understand, will money, the banking system be drafted for debts?
I think the question was about garnishments of bank accounts. Do you want to address
Okay.
that?
I can try. If they have a garnishment, if that's what's meant by drafted, then yeah, that obligation will already be out there. And so they'd have to work to try and get that resolved. Because it could, once all the information is reported in, it would then be eligible that could actually happen.
There are some types of income that cannot be garnished, and I believe this is not my area of expertise. So if others have a good answer, please jump in. But I believe that Social Security is one type of income that cannot be garnished. So if someone owes past Social Security and Social Security is their only income, I don't believe that it is supposed to be taken from a bank account. However, if they have other income and there is a judgment against them, then that could be garnished. And there's some really fantastic resources in the chat. I shared the Washington Law Help website that has some information on garnishments. Northwest Justice Project does work on the issue of avoiding avoiding garnishments and such. Also, the Northwest Consumer Law Center is another resource that I would recommend that can provide legal assistance, because when it gets to a judgment, it's really out of the hands of the financial institution and it really becomes a legal question. And so having representation, having an attorney would be really helpful, because it gets real complicated. And the laws have changed in the last couple of years in Washington, and I am not the expert on sort of what that looks like now. If folks have other things to share, Fen did a workshop a couple of years ago on dealing with collections, and so that is on our YouTube page as well, and I would recommend that as well, with Becky House with AFS and Julia Kellison with Northwest Justice Project were our presenters. Any other questions? All right, well, thank you so much, Erwin and Lisa. I really appreciate you sharing this information. I appreciate your time today in presenting to us and in putting all of this together. Thank you, everyone, for joining us today. I hope to see you again at another Bank On or FEN event. We've got lots of stuff coming up, and I hope you enjoy the rest of your day. Happy Tuesday.
All right.
Thank
Take care.
you.
Thank you very much, Jennifer. Everyone have a good